Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to discuss a very important notification that has been released by the Reserve Bank of India, that is in regards to the complete transition that should happen away from Libor. So what is the meaning of complete transition and why we are transitioning away from Libor? What we are going to adopt if we transition away from Libor? So what is this complete news article? Okay, what is the complete notification that has been released by the Reserve Bank of India? So all of this we are going to discuss in today's session, and today let me give clarity to you about the Libor, MIFOR and the other rates that we are going to discuss in today's session. But before starting with this session, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. So now starting with the news article, the RBI has asked the banks and the financial institutions that were treating the Libor, that were using the Libor as the benchmark rate. So first of all, Libor, in the easiest term, the Libor is the benchmark rate, or it is the reference rate on which the other interest rates are decided. Okay, like for the commercial loans, for the loans that is given, or the credit cards that is given, the interest that is charged on that, for the derivatives, the interest or the coupon that is charged on that. So those interest must be based on something. So Libor is considered as the reference rate on which the other interest rates were dependent on. So this is Libor, is the London Interbank Offered Rate, and this is the benchmark rate. It is the reference rate on which the other interest rates of the banks, financial institutions, they were dependent on. So around the world this was happening, that the banks and the financial institutions were using the Libor as their benchmark rate to decide on the interest rate for different products, financial products. So now the RBI has asked the banks and financial institutions to adopt by July 1st. By July 1st, they have to completely transition away from Libor. We have to stop using Libor, as there is quite many scandals related to Libor that also we are going to discuss. So the RBI has said that these banks and financial institutions, that is all commercial and cooperative banks, all India financial institutions, non-banking financial companies including the housing finance companies and the standalone primary dealers, they all have to transition away from Libor, and they have to start accepting or start using alternative reference rate or alternative benchmark rate that we can call. So I hope you have understood the basic idea that what we are going to study in the coming slides. Okay, so starting with Libor, let's understand Libor, and then we will have some clarity about that what we are going to talk in the coming slides. So Libor is the London Interbank Offer Rate, which is the most widely used benchmark for the short term interest rate. So this is the Libor is the benchmark. Libor is the benchmark on which other interest rates around the globe, the banks and financial institutions were using the Libor as the benchmark, as the reference rate on which the interest rates were dependent on. Okay, so interest rates were calculated, or they were determined on the basis of the benchmark, that was Libor. Now Libor was calculated, or it was computed on 5 currencies. It was computed for 5 currencies for 7 maturities. Okay, for 7 maturities. Okay, in short term also, you know that there is overnight rate, there is also 1 week rate, there is also 1 month rate, there is also 3 month rate, there is also 6 month rate, there is also 12 month rate. So 7 maturities, there are 7 maturities for which the Libor was calculated, and the Libor was calculated for 5 currencies. Okay, that is US dollar, pound sterling, euro, Swiss franc and yen, for these 7 maturities. So in total 35 rates were calculated every day. 35 rates, that is for 5 currencies, the 7 maturities, that is in total 35 rates were calculated every day. That is, the 35 rates were Libor rates for different currencies for different maturities. Okay, so Libor has played a critical role in the global markets because the Libor has been working as the reference rate, as the benchmark rate for around the globe for the banks and the financial institutions, and the banks and the financial institutions were using the Libor as the reference rate to decide the interest rate or the coupon rate. Okay, so it was the reference rate for financial contracts like the derivatives, like the forwards, futures, swaps, options, and benchmark for to gauge the funding cost and investment returns. It was even utilized for the financial products to decide the interest rate for the credit cards, floating rate bank loans for the interest rate or cross currency swaps. So I hope you have understood that how popular Libor was, and the banks and the private companies, the financial institutions, they were using the Libor as the benchmark rate, as the reference rate for raising the funds abroad. So it was specially used for the ECB, that is external commercial borrowings. It was a key benchmark for setting the interest rate that was charged on adjustable rate loans, mortgages and the corporate debt, especially for the external commercial borrowings that the corporates used to do from other countries. So on these, like if I want to raise, I'm a corporate, I want to raise the money from US. So for let's say 6 months, for 6 months. So we will see that, okay, what is Libor? What is Libor? What is Libor for US dollar? So for US dollar, what is Libor for 6 months? For 6 months, okay, for 6 months. Or if I want to raise the loan from, let's say, from Switzerland, so the Libor will be seeing that, okay, Swiss franc and 3 months loan. The Libor were decided for 5 major currencies, right? So it is specially used for the external commercial borrowings. So I hope you have got the basic idea of Libor. So now why we are transitioning away from Libor, that was such a popular method that the whole world was using this Libor as the benchmark rate, why it is getting replaced? So let's understand that how the Libor is set first of all. So Libor rate is set for 5 currencies and 7 maturities. So for each currency, the 7 maturities, the Libor rate is calculated. So the 35 rates are calculated every day for Libor. Now how this Libor rate is being decided? So each day 18 international banks or 11 to 18 global banks, they provide the idea of the rates that they think that they will pay if they are borrowing. So the 18 global banks provide the rates on which they think that they will be borrowing the money from other global banks. Okay, so each day 18 international banks submit their ideas of the rates they think they would pay if they had to borrow the money from the another bank on the interbank lending market in London. Okay, that's why it is called London Interbank Offered Rate. So it is important to note that Libor isn't set on what banks are actually paying to get the borrowing or to get the money. The Libor is set on what the international banks think that they will be paying to borrow the money. So it is not based on, Libor is not based on the transactions that are happening. The Libor is based on some imaginary number that is set by the international banks. And on this number, on these 11 or 18 global banks, you can consider that the Libor is set, and the Libor is affecting all the banks, all the financial institutions around the world. And to help guard, now there are some global banks can give extreme percentages for the highest and the lowest, and these 4 highest and the 4 lowest percentages were taken out, okay, were stripped out, and then the average were calculated from the middle values, and then the Libor was decided for, that is the 35 rates were decided. So in the past, a panel of bankers oversaw Libor in each currency. So a panel was decided of the 11 to 18 international banks, and they decided the Libor. Okay, in a way, so the panel of the bankers or the panel of the international banks, they were kind of deciding the Libor because they were giving the ideas of the rate for which they will agree to borrow in the interbank lending. Okay. So you can consider that how these 18 international banks can actually manipulate the Libor as per their requirements. And in 2012, there was a scandal that came out that actually these global banks were manipulating Libor big time for their own profits. So scandals exposing manipulation of Libor were brought out in 2012, and this has led many national regulators to identify alternatives to Libor. And from then onwards, from 2012 onwards, it was said that we have to move away from Libor because it is quite on the imaginary basis. It is not based on actual transactions that are happening, and the global banks can manipulate this Libor very much. Okay, so Libor is being phased out because of the role it played in worsening the 2008 financial crisis also. So in 2012, the investigation that took place that told about the manipulation that was done on Libor. So in 2012 investigation, the world also came to know that the subprime loans, the 2008 crisis of US, it actually happened, or there was a big role that was played by the manipulation of the Libor. So the 18 global banks, or the global banks, the international banks, they were manipulating the Libor for their own profits, and that's why the 2008 crisis actually worsened. So Libor is being phased out because of the role it played in worsening the 2008 financial crisis, as well as scandals involving Libor manipulation among rate setting banks. So the banks that are involved in setting the rate of Libor, there is much manipulation that is done by those banks. Okay, and there is no transparency that is provided. The banks are deciding, the banks are giving their ideas of the rates, just they think about their ideas, just they think that okay, this should be the rate, and they are giving the idea. So there is no transparency that why they are coming on this kind of logic that this should be the rate. In 2012, investigations into the way Libor was set uncovered a widespread, long-lasting scheme among multiple banks to manipulate the rates for their own profit, and that's why now the Libor is being phased out, so that a better measure, a better benchmark, a better reference rate can come for the banks and financial institutions. Okay, so the Libor, I have told you, it depends on 5 currencies. It is built for, or it is computed for 5 currencies for 7 maturities. Okay, so 35 Libor rates are calculated on each business day. Next is, so background. What happened that the Financial Conduct Authority, so this is the background. Okay, so Financial Conduct Authority of UK, Britain, so they announced in March 2021. In March 2021, they announced that okay, we were trying to improve the Libor setting mechanism, but it is still not very up to the mark. Okay, the countries are not very happy with Libor even after the improvements that were happening. So FCA UK, the Financial Conduct Authority of UK, they announced that all Libor settings will either cease, they will stop to be provided, that is the Libor rates will not be provided by any administrator, or they would no longer be representative. That is immediately after December 2021. In the case of pound sterling, euro, Swiss franc and Japanese yen settings, the Libor will not be provided, and for the 1 week and 2 month US dollar settings also, the Libor percentage will not be provided. The Libor rate will not be provided. After June 30, 2023, for the remaining US dollar settings, that is for the overnight one and for the 6 month, 12 month, for those also the Libor will stop being released or being provided. Okay, so I hope you have understood that the FCA UK, you do not have to remember the dates and such, just you have to remember that the FCA UK, it came out in March 2021, and it said that okay, we are going to stop the Libor settings, or we are going to make it not longer representative for the reference rate. Okay, the complete transition from Libor is significant event for the global financial markets, because till now it was used as the benchmark rate, as the reference rate. So the Reserve Bank also said that okay, it is going to, the Libor rates will stop coming from June 30th 2023. So RBI said in July 2021 that the banks and financial institutions in India should stop using Libor now, and they should start transitioning to some other rates. So when the Libor rates will be stopped, when the Libor rates will be stopped, okay, then the banks of India or the financial institutions of India should not have any problem. Okay, so start transitioning. This was said in July 2021. Okay, so the banks or financial institutions, they were encouraged to undertake the transactions using widely accepted alternative reference rate. So they said, the RBI said that start using the alternative reference rate, start transitioning to the alternative reference rate, so that you no longer have the problem in the future when the Libor rates will stop coming. So after June 2023, the publication of the remaining 5 US dollar Libor settings will cease permanently. So I have told you that the US dollar settings, or the US dollar Libor settings, they stopped for the 1 week and 2 week. That is for 2 maturities, they already stopped by December 2021, and for 5 maturities, it was said that they will stop from June 2023. Okay, so if the Libor rates will no longer be released, or if the Libor settings will no longer be released, so India should also not follow it. Okay. So now coming to MIFOR, banks are also, now we have understood about Libor. Okay, the Libor was creating problems, and that's why we were phasing out. The whole world was phasing out the Libor, and in India also since July 2021, the RBI has said that okay, we have to move away from Libor, and now it has been said that from July 1, 2023, all the financial institutions, all the banks have to start using some alternative reference rate. Now, banks are also encouraged to cease using the MIFOR, that is the Mumbai Interbank Forward Outright Rate. Okay, so this MIFOR, we need to stop using this MIFOR because this is based on Libor. MIFOR is based on Libor, and it is published by Financial Benchmarks India Private Limited, which references the Libor. So MIFOR is based on Libor, and that's why we need to stop using the MIFOR also. So MIFOR, here I have given you some extra information. Okay, you can read it. Very easy it is that the MIFOR is based on the mix of the Libor, as well as it also is based on. So MIFOR is decided on the basis of Libor plus the forward premium. There is a forward premium. Let's say Libor is 5% and forward premium is 1%, then the MIFOR is decided on the basis of these. Okay. So why there is forward premium? Because the MIFOR is usually for the forward rate agreements. Okay, MIFOR. So MIFOR is used for setting the prices on the forward rate agreements and derivatives. So MIFOR is usually used, it is commonly used for setting the prices on the forward rate agreements. Okay, for the forward agreements the MIFOR is used, and for derivatives the MIFOR is used. Here the MIFOR is a synthetic term, rupee rate, that is derived from the Libor. That is the, I have told you na, that Libor is calculated for 5 currencies. So on the basis of dollars, the MIFOR is decided. Dollar Libor, dollar based Libor, the MIFOR is decided, and the USD INR forward premium. So forward premium is decided on the basis of the exchange rate between the USD and INR. So this is the idea. You do not have to go in depth, just have the understanding that the MIFOR is based on Libor, and that's why if the Libor is getting phased out, so the MIFOR is also getting phased out. The RBI stated that some banks and financial institutions, they were yet transitioning away from Libor. They have not completed the transition away from Libor, and that's why the RBI has to bring this notification that by July 1st, 2023, they have to start from this date. That is, they have to start the accepting the alternative reference rate, using the alternative reference rate. So they, by June 30, 2023, they have to stop using the Libor, and from July 1st, 2023, they have to start completely, they have to transition to the alternative reference rate. So both Libor and MIFOR would stop to be representative benchmark from June 30 this year. Okay, and from July 1st, 2023, some alternative reference rate will start. Okay, so let's discuss about this alternative reference rate. Okay, they are transitioning away from Libor, so they are going to transition to SOFR, that is secured overnight financing rate. So this is the rate that will be the benchmark, or this will be the reference rate. In India, we will be transitioning to SOFR rather than, so we are transitioning away from Libor and we are transitioning to SOFR. We are going to start using the benchmark, that is SOFR. This is the reference rate for deciding the interest rate for the external commercial borrowings and for the other kind of loans. So you can understand that why we are using SOFR. So SOFR is quite a transparent rate that is decided on a transparent mechanism. See, in India, the repo transactions happen in which the RBI lends the money to banks and at the repo rate, and the banks provide the government securities to the RBI. Similarly, the SOFR is actually the rate that is based on the US Treasury securities. Okay, so let's understand this. So SOFR is a broad measure of the cost of borrowing cash overnight collateralized by US Treasury bills. So SOFR is a broad measure that is dependent on the interest that is charged for the collateralized US Treasury securities. Okay, that is for the repo operations. The repo rate or the interest that is charged, on that basis the SOFR is calculated or it is managed. SOFR is published by the Federal Reserve Bank of New York, and it is a good representation of the general funding conditions in the overnight treasury repo market. So in the repo market, the overnight repo market, the rate that is going on that basis the SOFR is decided, and this treasury securities, the repo transaction happens on the collateralized basis, right? That the banks have to give the collateral. As such, it reflects, the SOFR reflects the economic cost of lending. That is, the cost of lending means what? The cost of borrowing means what? That the interest that is being charged. So SOFR reflects the economic cost of lending and borrowing relevant to the wide array of market participants active in the repo market. So this SOFR is based, simply it is based on the cost of borrowing and lending, that is the interest rate that is being managed and that is being running in the repo market. Okay. And like in India, we are giving government securities, the banks are giving government securities to the RBI. In the US, the collateral is the US Treasury securities, that you can understand. Okay. So now, new transactions are now predominantly undertaken using the SOFR. So now we have transitioned away from LIBOR, and we are transitioning to SOFR, and now the SOFR is considered as the benchmark or the reference rate for the interest rates, okay, that the banks and the financial institutions are going to charge. Now, on the basis of LIBOR, the MIFOR was decided. So MIFOR was decided on the basis of the LIBOR and some forward premium. Similarly, on the basis of SOFR, now the modified MIFOR will be decided, that will be dependent on the SOFR plus some forward premium. The central bank said this, that the SOFR is considered a more accurate and more secure pricing benchmark. So it is quite secure because it is actually dependent on the actual transactions that are happening. The SOFR is dependent on the actual transactions that are happening in a market. Okay, it is not based on some imaginary idea that okay, this should be the interest rate. No, it is the SOFR is decided on the basis of the interest that is actually being charged for the transactions. Okay. So banks and financial institutions are advised to ensure that no new transaction. So this is the advisory that has been given by the Reserve Bank of India in its notification, that the banks and financial institutions are advised to ensure that no new transaction undertaken by them or their customers should be dependent on the LIBOR. Especially we were using the US based LIBOR. There were five currencies. There were five currencies on which the LIBOR was calculated for. But we were using the US dollar. So there should be no more new transaction that should happen on the basis of LIBOR or MIFOR. The financial benchmark India Private Limited, that was releasing the MIFOR, has stopped, will stop to publish the MIFOR after June 30, 2023, because then the LIBOR will also be stopped to be released. Okay. So now the banks and financial institutions, they are advised by the Reserve Bank of India that they should take the important steps to ensure that there are the fallback clause that are added for the previous contracts. Okay, fallback clause means that if anything wrong happen, because there are many contracts that are that were made on the basis of LIBOR. So if anything, any problem come for those contracts, so what steps should be taken to remedy that? So fallback clause should be added to all the remaining legacy financial contracts that were based on the LIBOR. Okay, so it has been said that you have to add, the banks and financial institutions should add the fallback clause on the previous LIBOR contracts, including the MIFOR contracts also. Banks and financial institutions are expected to have developed the system. So RBI said that we have said in July 2021 that you should start transitioning to some alternative reference rate, that is SOFR and the modified MIFOR. So the RBI said that we informed you in July 2021. So we hope, the RBI hope that banks and financial institutions have already developed the complete transition process, and they have developed the system and processes to manage the complete transition away from LIBOR, because it was introduced, it was announced by RBI that we are going to transition away, and it was announced so early. Okay, so here are the alternatives to LIBOR. Okay, so for the US dollar, we have understood that for the overnight cash, for the overnight borrowing, we can say, for the overnight borrowing, there is the interest rate that is being charged, okay, in the repo market, and this interest rate that is being charged in the repo rate is for the collateralized market, repo market, where the collateral is the government, the treasury securities. Okay, it is released by the Federal Reserve. So for the US dollar, the SOFR, that is based on the overnight cash rate, we can say. So SOFR is for the US dollar. This is the alternative to LIBOR. For the pound sterling, there is Sonia. For the euro, there is Esther. For Swiss franc, there is SARON. For Japanese yen, there is TONAR, Tonar. So these are risk-free rates because they are based on the active market transactions and the current market transactions, or the market transactions that are actually happening in the market, which provide a barrier against the manipulations. Okay, alternative rates are published at different times and are also currency specific against LIBOR. Okay, so they are currency specific. That is, if US that is Federal Reserve is releasing it, it is specially for the US dollar. If the Switzerland is releasing it, it is specially for the Swiss franc. Okay, so this is the first question. I hope you will be easily able to answer this question. You just have to tell that from when the adoption of the alternative reference rate will be complete, and the complete transition away from the LIBOR will happen from which date. So this is the second question, in which you have to tell the incorrect statement regarding the cessation of LIBOR. So I hope you will be easily able to answer this question also. So now we have brought for you the complete guidebooks for the RBI, NABARD and SEBI. Through these guidebooks, you are going to get all the information that you want to get. So all your common queries can be answered through a single guidebook. You do not have to visit different links. You do not have to visit different websites. If you want to know about the examination, the source, the strategy for the examination, the sources for the examination, the syllabus for the examination, the previous year cutoff for the examination, all these common queries can be answered through this single guidebook. And do download these guidebooks. They are going to help you a lot in understanding the pattern of the examination and for the preparation for the examination. And this is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below. So do download these guidebooks. Okay, so now thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.